The share price of ailing health software company iSoft continued to fall today, despite assurances from executives of a turnaround in fortunes. Investors have lost confidence in the company after a raft of bad news about its operations in the UK and Europe. The share price closed today at 18 cents. CEO Gary Cohen has just returned from iSoft's UK headquarters. The MD says while it's been a hard year, he can get the company back on track. Alicia Barry reports.
While iSoft looks after patients' medical records, the company is in need of some emergency care.
I'm very determined and committed to actually making this turnaround.
iSoft CEO Gary Cohen is under intense pressure to improve the health of the company's share price.
Ultimately, the buck stops with you. You are responsible for these things, and I guess in hindsight, we could have done a better job.
This company has grown too fast without a focus on shareholder value. When you read management presentations and discussions, it's been all about size and scale.
The stock reached a yearly high of 93 cents in August last year. Since then, it has been on a downward spiral. And the company's leaders haven't escaped the rout, with the CEO recently forced to sell shares because of margin calls.
We've obviously lost quite a bit of money, as other shareholders have, with the recent share price performance.
A major loss of investor confidence was sparked by news earlier this month that delays in its major contract to roll out a big chunk of the UK's e-health network would impact this year's earnings.
That revenue is not going to be what they'd expected for FY10. It may return at some time in the future, but they're a high fixed cost business, and so if those revenues aren't realised, then that flows straight down to the earnings line.
Gary Cohen argues the delay is partly due to the change of government in the UK and a weak European economy. But he says recent austerity measures won't cause more problems for the project.
This is a £12 billion project that we're talking about, that we are part of, and that project budget has been in place for quite some time. There's been no suggestion that there'll be major changes other than what's been previously announced.
In the coming year, iSoft will reduce its reliance on the major UK contract to less than 10%. It has also tried to fix much of the damage to its credibility caused by the project with a board reshuffle. However, analysts say the company still has a long way to go, and while it has not yet breached its banking covenants, it is close to borrowing capacity.
We think that the company has funded its operations by drawing down additional funds and increasing its working capital. And that's not a desirable situation.
Gary Cohen won't rule out topping up the balance sheet with a capital raising. And he concedes the company could be a takeover target.
Well, there's no doubt that that's obviously a concern, both as it is for any company with a weak share price.
It's going to be a long rebuilding phase if the company remains independent. In the short term, the only upside I see for shareholders is if a takeover bid was to emerge.
Gary Cohen says iSoft will update the market in the next few weeks with plans to improve cash flow and profitability.